Good afternoon. Welcome to Political Science 3400, Public Administration. This is a lecture, or the first of two lectures, on budgeting and financial management. This set of lectures addresses the place of budgeting in public administration. As Prince notes in your text, budgeting involves formal processes for the planning, control, and management of revenue and expenditures in the multiple organizations of government. Planning is necessary to establish priorities, organize the resources necessary to meet budget commitments, the things governments have committed themselves to do, and make room for contingencies beyond the control of individual governments, departments, or managers. Control is necessary for accountability within the hierarchy of government to ensure that governments and their various components have the legal authority to raise and spend money for particular purposes, and that during the budget or fiscal year, these funds are spent for those purposes and not for something else. Management is necessary to define objectives and processes clearly enough for these tasks to be organized and carried out with the resources provided. It involves overseeing and giving account for the use of these resources, building in risk management processes to mitigate and deal with foreseeable problems, and adapting to the evolving environment in which most public sector organizations function over time. You have 4 readings for today's class. Michael Prince's reading in the Dunn text explores the political, institutional, and historical context for public budgeting in Canada, primarily at the federal level. David Good's reading from the Politics of Public Money examines the interaction between guardians, the Department of Finance, and other central agencies who oversee the overall budget or fiscal framework, and spenders, the leaders of line departments and operating agencies, which compete for budgeted funds to carry out their different activities and policy objectives. Munir Sheikh, the former senior official of the finance and other federal departments, compares the fiscal and budgetary policies of the United States. And finally, Andrew Graham looks at issues of financial management, managerial controls, and internal accountability. This summary helps us to understand that budgeting in government takes place at multiple levels. These include macro budgeting, micro budgeting, and mezzo budgeting, M-E-Z-Z-O. Macro budgeting involves the processes for government-wide budgeting for both revenues and spending-related activities. Most of us should be familiar with the ritual of a finance minister's budget speech in Parliament or provincial legislature, which summarizes the major details of the annual budget. This process is replicated at a smaller scale in broader public sector organizations. For example, the 2019 City of Lethbridge budget anticipated spending of $405 million, about $4,000 per resident. The University of Lethbridge projected an initial budget of $220 million for the 2019-20 fiscal year, which runs from April to March. Obviously, some changes have been made to that budget. In recent years, most provinces have moved in the direction of consolidated budgeting, which not only accounts for direct public provincial revenues and spending, but also those of the broader public sector organizations largely or primarily dependent on provincial resources. By contrast, micro-budgeting involves the allocation and sometimes raising of revenues to and spending by subordinate organizations within a broader government structure. Examples could include a provincial or municipal parks and recreation department, one of the faculties such as arts and science or education at this university, or the department responsible for managing the facilities or physical plant of a government or component organization. Micro-budgeting takes place within the context of macro-budgeting, as such organizations are usually dependent to greater or lesser degrees on funds provided by the larger organization's macro-budgetary allocations from year to year. Mezzo-budgeting involves provision for the interaction of different organizations within government. As Prince notes, it may take the form of budgetary envelopes, that that is, funding for related functions which may cut across government departments or agencies. Examples could include different forms of income transfer and social assistance programs administered by different departments or agencies. During times of budgetary constraint, Metso budgeting may look for ways of saving or reallocating money across related functions through program reviews, which explore the ways in which particular activities and programs may be managed or funded differently. Such measures may include transferring responsibilities to other governments, government departments, nonprofit organizations, or the private sector. Although they could also involve transferring responsibilities among and within organizations. Next slide. Macro budgeting is an inherently political exercise, as it helps to determine who will pay and continue to pay for various activities and the priorities to which government spending will be allocated. The federal or provincial Minister of Finance tables a budget annually for the coming year to obtain parliamentary or legislative approval for the government's tax and spending requirements. In practice, the general public expects that governments will continue to provide most services and transfers they now provide. This means that most past budget decisions carry on with relatively few changes from year to year. The budget is a test of parliamentary confidence in the government. If the budget is defeated or amended without the government's consent, the government falls and an election is usually called. A majority government may sometimes make technical changes to a budget if public debates after the budget is presented identify a serious error or unintended consequences of particular budget actions. However, minority governments must take into consideration at least some opposition priorities, as in New Brunswick during the recent budget cycle, or risk triggering an election or being thrown out of office. Following the budget speech, the finance minister tables a Ways and Means motion in Parliament to seek approval for specific tax changes and general spending authorizations. These are followed by specific budget implementation bills, which generally include any amendments to existing legislation necessary to implement the policy decisions in the budget. When these bills are put together in a single large piece of legislation, governments often use such omnibus bills to implement other policy changes not directly associated with tax and spending decisions. For example, the Trudeau government included controversial changes to asylum rules for irregular migrants in the 2019 budget omnibus bill. Although a Commons committee held hearings on these measures, their inclusion in a budget bill meant that they could not be voted on separately from the budget without making it an issue of confidence, requiring support from all government members due to requirements for party discipline. Previous governments, of course, have taken similar actions for many years. In addition to the budget implementation bill or bills, Parliament and provincial legislatures must also approve spending estimates for individual government departments. The estimates provide a list of resources required by individual departments and agencies for the coming fiscal year to deliver the programs for which they are responsible. Votes on each department's estimates provide formal authorization for its spending plans in the coming year. Of course, as we've seen from the current coronavirus pandemic, there may be events during the year that disrupts the government's financial plans or economic strategy. In such cases, governments can table supplementary estimates in parliaments or legislatures to obtain approval for additional spending measures, as in Alberta during the past week. Budgets both reflect and respond to economic variables. A growing economy will generate greater levels of revenue, prompting demands either for tax reductions or increased spending. Slow economic growth increases demand for social spending, income transfers to individuals or families, and possible tax relief for those whose cash flow is affected by an economic slowdown. However, it may also impose pressures for constraint on other, lower priority areas of spending, as deficit spending must ultimately be paid for either by higher taxes, the reallocation of future revenues, or less funding available for routine government functions because of increased interest charges on the public debt. Budgets may be expenditure-based, driven mainly by government spending priorities, or revenue-based, with volumes of spending and spending priorities determined by the government's capacity to raise revenues without having an adverse effect on economic activity. These issues will be addressed a little later in the class. Budgetary policies can often be influenced by the electoral cycle. That is, how close annual budgets are to the previous or the next election, especially as many governments have now adopted fixed election dates. Public servants must find ways of determining how to integrate a new government's election promises within the fiscal framework. There are generally internal debates on specific promises that can be implemented immediately. Others will be phased in over time, over 2 or 3 or 4 years. Some promises fall into the nice to have category, that being sufficiently costly or perhaps ill considered mean that they will be studied until new priorities emerged. Budgetary actions involving difficult policy choices are usually better implemented early in a government's mandate to allow enough time for adjustment, whether by affected interests, governments, or both, before the next elections. Governments often use pre-election budgets to provide additional spending increases, tax reductions, or both that will appeal to important voter groups, a form of financial opportunism that is sometimes described as bribing voters with their own money. Municipal budgeting processes are centered on the processes of balancing desired levels of spending on various services with decisions on the levels of property tax increases on different groups of citizens and businesses. These processes generally involve debates among council members and various interest groups over specific spending decisions and levels of taxation. However, municipal budgeting authority is subject to provincial legislation governing the powers of municipalities, which may impose either certain responsibilities on municipal governments or shift them to other public bodies. Next slide. Your reading by Munir Sheikh distinguishes between budgetary policies and fiscal policies. Budgetary policies speak to a full range of tax, spending, and debt-related policy choices open to government to pursue its objectives and finance its activities. Fiscal policies focus mainly on the effects of budget decisions on overall levels of taxation, spending, and borrowing, and their effect on overall economic activity, employment levels, and relative economic stability over an economic cycle. That is why they are often called stabilization policies. Fiscal policies may or may not reflect Keynesian theories of macroeconomic management. During times of economic downturn, Keynesian policies provide for both automatic stabilizers, which don't require formal changes in tax levels or program design, in order to increase citizens' purchasing power, whether through the automatic lowering of taxes actually paid, for example, because incomes or profits decline with economic activity, or greater spending as a result of programs like employment insurance, which are available to people who lose their jobs within the criteria of the program. This can encourage greater economic activity, or at least offset the decline in economic activity. They can also include, budgets can also include specific choices or discretionary policies to stimulate the economy through increased deficit spending. Keynesian theories also suggest that governments should reduce deficits, limit spending growth, and reduce government debt relative to the size of the economy during good economic times, something that often runs at cross purposes with public expectations. Canadian government policies have been typically more semi-Keynesian, stimulating economic activities during economic downturns, but imposing limited constraints after economic recoveries. This is one reason why monetary policies, which are under the control of the Bank of Canada, have replaced fiscal and budgetary policies as the most important tool for economic stabilization since the 1990s. There are two other major constraints on Keynesian policy making. First, Canada is a heavily trade-dependent economy, with exports and imports accounting for almost 2/3 of economic activity. There is a lot of leakage from fiscal policy decisions across national borders, given the spillover effects of trade. Secondly, federal spending net of transfers to the provinces accounted for less than a quarter of overall government spending in Canada in 2018. This means that the effectiveness of short-term federal fiscal policies depends heavily on the extent to which they complement or are offset by provincial fiscal policies over which Ottawa has little or no control. This has led governments to take a more medium-term approach to stabilization in order to be able to sustain particular policy approaches as long as economic conditions permit. However, at the provincial level, we can see that some provinces, particularly Alberta, have been pro-cyclical in their fiscal policies. That is, reinforcing the boom and bust cycle of our resource-based economy due to their extensive reliance on resource revenues for current spending. Next slide. This discussion leads us to two approaches to budgeting that are addressed indirectly rather than directly in your readings, but which are directly related to current budgetary challenges in Alberta. These approaches may be called expenditure-based budgeting and revenue-based budgeting. All budgets, to some extent, involve the aggregation or adding up of the individual spending plans of departments and other operating units of government. However, with expenditure-based budgeting, overall spending levels are driven primarily by departmental spending plans, rather than the constraints or the priorities of central agencies in macroeconomic management. These plans reflect a combination of inertia, what the department spent last year, and momentum, the incremental growth of the cost of service delivery, as reflected by the growth of the client population, for example, the number of students or the average age of patients in the health system, the cost of inflation, and the cost of union contracts, along with any other additional political commitments the government may wish to make. Major changes which require concerted government action, what David Good calls big fixes, will require additional spending or a significant reallocation of government priorities. Revenue-based budgeting, or budgeting within a disciplined fiscal framework, results when the Department of Finance constrains overall spending levels based either on available revenues or a maximum borrowing target for the coming year. This approach to budgeting is driven by assumptions of relative or absolute scarcity. These assumptions may be reinforced by some combination of external economic forces, public resistance to increased taxation, falling commodity prices, especially in places like Alberta, and political leaders' view of the appropriate size of government. Revenue-based budgeting should not be confused with austerity budgeting, which requires overall reductions in levels of government spending, not just reductions in the recent rate of growth of spending, as suggested by some observers. Revenue or framework-based budgeting can take several forms. Finance ministers may attempt to focus discretionary spending on a key budget theme, using a variety of policy instruments, while imposing tighter restraints on other areas of spending. More generally, the relative growth or constraint on spending allocations to different departments is a clear sign of government priorities. This concludes our overview of macro budgeting processes for today. In our next class, we will look at the interaction of what Donald Savoy and David Good calls guardians and spenders in the budgetary process. We'll look at micro-budgeting processes, and as time permits, we'll look at the financial and risk management processes used by governments in implementing budgets in public sector organizations. Thanks very much.